Ladies and gentlemen, boys and girls, we have wrapped up another volatile and crazy week in the market. We got a UK trade deal, but more importantly, we got a framework for every other deal that is to come. Now, looking ahead, the most crucial of all trade deals is yet to be discussed. Scott Bessent is meeting China officials in Geneva to discuss the upcoming US-China trade deal, and ultimately the market price action next week will completely depend on the details of this deal. Will we get a terrible deal? Will we get a good deal or no deal at all? That is what we're going to talk about today, along with market sentiment, earnings, and of course the charts. There are some great charts and there are some terrible charts. So is this the end, or are we going to all-time highs? We've got a lot to talk about. Let's roll the tape.
Welcome everybody to the daily recap show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it.
This is the daily heat map of the S&P 500, and US stocks wobbled on Friday after President Trump hinted at more trade deals coming and raised the possibility of a cut to US tariffs on Chinese imports ahead of trade talks between the two countries this weekend. And on the back of that news, it was very, very mixed trade action here today. For example, look at tech. We had Microsoft gain, we had Apple gain, but we had Nvidia fall along with Meta and Google as well. Mixed price action in hardware, mixed price action in software. And that was the case across the board in the market, except for healthcare and consumer staples. These two sectors were deep in the red, and the two worst performing sectors on the day. To get a better understanding of what the market did, it's far better to look at the market like this, right? We sort of saw large caps take a little bit of a breather here today across value, core, and growth. And then we also saw growth as a whole across mid caps and small caps, taking it on the chin, with small cap growth performing the worst. And then we saw the value and core in the smaller segments of the market outperform, relatively speaking. The worst performing sectors were XLP and healthcare, staples and healthcare, but we also saw stuff like XLK and XLC underperform the broad market, with the S&P 500 returning 0.13% today. But we did have a number of green sectors as well. Financials were flat, but industrials, utilities, materials, discretionary, real estate were all in the green today. Gold outperforming up 0.73%, and then the best performing sector being the energy sector because of the China trade talks. Looking at the week ahead, we saw roughly the same price action, very mixed price action. There were winners for the week, there were losers for the week. The S&P 500 down 0.43%, with the best performing asset class being gold, up just shy of 3%. And the reason why we had this price action today and the price action we saw this week had to do with trade deals. Trump officials, mainly Scott Bessent, is set to meet the Chinese negotiators in Geneva, and that actually gave us a little bit of an uplift into the early morning trade. We actually saw stocks were actually very bullish here on Friday on the back of this news. However, we paired a lot of those gains when Trump came out and said an 80% tariff on China seems about right, and that gave the market a bit of pause. The market was expecting something like the UK trade deal. If we're still going to have an 80% tariff on China, that is still going to be a very, very big tariff. That's still going to be inflationary. That's still going to hurt demand. That's still going to increase prices, and that's still going to weaken the economy. And that is why we saw the markets pull back, to finish off the day, along with that normal de-risking. Trump also came out and said China should open up its market to the USA, would be so good for them. Closed markets don't work anymore. So we sort of went from these protectionist policies in the US where we're going to tariff everybody because they're ripping us off, to yes, let's open the markets. Very, very weird messaging from the Trump administration. However, this is the cards we have chosen to play, and here we are. Now, looking at some market movers, Lyft actually reported its Q1 earnings. Now, it missed on revenue, beat on EPS. The stock was up 28% here today, and that was because of some really upbeat commentary from the management team, and they're also looking at some very, very amazing growth drivers. And when you actually look at the stock, although it trades on a 16 forward PE, it trades on a 5 times EV to free cash flow. And when you get some bullish commentary from the management team coupled with like a nosebleed valuation, you're going to get an absolute rip to the upside. I wouldn't be surprised if this actually goes higher, to the $20 mark before the next earnings report. The trade desk was up 18% today on the back of its earnings. Now, it reported a revenue beat, EPS beat, and raised guidance ever so slightly. Amazing earnings from this company. Now, on my FinFluential media channel, I have a full review of the trade desk and an earnings analysis. So go ahead and check it out, guys. I talk about the earnings and we discuss, is it a buy right now? So go ahead, check it out. FinFluential Media. And another market mover today was Transmedics. They were up also 20% on great earnings, revenue beat, EPS beat, raised guidance as well. And that's just the thing. When you raise guidance in this macro, in this type of environment, you're gonna get rewarded by investors. And the beats here were actually really, really massive. So, and then for everything we saw today, there were about 3,000 decliners, 3,000 advances, very, very evenly split. We saw inflows in the New York Stock Exchange, outflows in the NASDAQ 100, but very, very volatile and choppy action. You could see here that we were very upbeat in the early hours, but then we paired all of those gains and into some losses, with the S&P 500 kind of flat here today. But market momentum remained intact and we saw tangible improvements from last week. You could see here that the 5-day, 20-day, and 50-day moving average continues to be above the 50% mark. The 100, 150, and 200 not so bullish. However, look at last week compared to this week, 32%, 31%, 34%. We're seeing tangible improvements from last week into this week. And ultimately, that's what you want to look for. If you're not where you want to be, you want to make sure you're working towards that level, especially as it pertains to market momentum. Now, looking at the charts, a kind of red day, but it was kind of flat. You could see the NASDAQ 100 was flat. So too was the S&P 500. The IWM fell 0.18%, but we were up about the same in extended hours. It was generally just a flat day for the market. And if you actually look at the week, that's kind of what we did. Slightly bullish, if you ask me, but the week was kind of a flat-ish week. We had ups this week and we also had downs. Net, we were kind of flat. You can see the S&P 500 only up 0.25% over the last 5 days. Along with that, Europe bucked today's trend, up 0.5 percentage point, but China also fell. Volatility did fall as stocks were kind of flat-ish today, and the VIX complex is officially in contango. This is exactly what you want to see, where the VIX spot VIX is lower than the front month VIX. This is the type of VIX curve we actually want to see in the market. The 2-year, 10-year, and 30-year yield, again, very mixed price action. The 2-year gained, the 30-year fell, the 10-year was in between, with the dollar falling but still staying above that 100 mark, and bonds gaining ever so slightly. Bitcoin kind of flat, but holding the 100,000 mark really goes to show the momentum we're seeing in that asset class, and gold still above the 3,300 area. So we did have a flat week today, but what can we expect in the week ahead for the S&P 500? And if I'm being completely honest with you guys, it's all going to come down to the China trade talks. Ultimately, once the China deal is released, maybe Saturday, maybe early Monday morning, really depends on when they're going to announce the official deal. Once that deal is announced, that is going to determine our next move. And if it beats the market's expectations and it's a really strong deal for America, stocks are going to move to the upside. However, if it's a very poor deal for America, I think stocks are going to move to the downside as well. So that is why we saw the price action that we saw today. We did get a little bit of an uplift this week from that UK trade deal. Now it's, can we get a deal with China? If we can get a deal with China and the framework looks really, really good, stocks will move higher. But if we're still going to have 80, 90, 100% tariffs on China as a whole, I think we're going to see stocks move to the downside in response to that. So don't try and react. Don't try and predict what the market's going to do. Wait for the deal, look at the market's reaction, and then go from there. Is it going to be to the upside, to the downside? Assess the trade deal and go from there. And I will keep you guys updated on the weekend on this channel, so you guys can always stay informed as to what direction we will go after we get that trade deal. That being said, we are showing very, very clear resistance at this very, very strong resistance zone. And the fact that we couldn't break above and hold is really telling us one thing, that we are still in this downtrend. You can see we put in a high, a lower high, and now another lower high. That's not good. Ultimately, if we want to break this trend right here, we have to go ahead and close above the high right here, which is 57.86. I know it's only about 120 points away from where we closed here on Friday, but that's 120 points is a lot in the grand scheme of things, especially after you've had a 14% rally on a peak to trough basis. So everything's going to be dependent on this China trade deal that's going to come on the weekend. Once that is announced, the market will do its thing, and then we will determine what goes next. Do we actually go ahead, potentially hit some of these highs, or do we pull back to this 54.30 zone? If we do pull back, this is the zone that you should probably be watching, 54.30. That is probably the first leg of support that we will use, and then we will determine what happens next. Very similar situation in the NASDAQ 100, right? It's up to the trade deal, and that's going to determine where we go next. And that is the case with pretty much every single asset class right here. The IWM does look a little bit more resilient. We did have a very, very solid weekly close, if you ask me. That's 1, 2, 3, 4, 5, the 5th week in a row of gains. However, on the weekly chart, we're still not quite at this level right here. This is a high volume area, as you can just see from the candles. Once we actually break above this area right here, the IWM, and then rally to those 52-week highs right there. With that being said, solid momentum in the IWM, all things considered. Now let's actually have a look at gold. There's not much to say here with gold. Ultimately, I think if we go ahead and break this area right here, then we probably will see more downside. However, if we hold it as we probably will go higher. This does look like a double top formation, and it does look like we solidified that right now. However, you do want to notice that we did close at the wick, which is ultimately the more important vector. The actual close, the actual candle close matters more than the wick. That being said, we did have price discovery at these highs, but it was shot down by the bears. And then we also saw that same bearish momentum at the tops here. So gold not looking that great. It does look like a double top. However, until we actually go ahead and break like the 32.30 area, you probably want to remain constructively bullish in gold. Bitcoin is tracking global M2 money supply very, very closely. No changes right there. The path of least resistance continues to be to the upside. Do expect some volatility, but yeah, Bitcoin will continue to move higher because it is getting this massive boon and massive tailwind from a global M2 money supply. Guys, looking at European stocks, we got a strong move here off the lows, and we've actually recaptured some very, very key levels. I mean, right now, if we are actually to see a pullback, right, I think you're going to find very, very strong support sort of at this level right here. And ultimately, if you're looking to get into European stocks, wait for a pullback sort of to this 525.30 level, and then go from there, and we could probably target all-time highs. This looks like pretty strong price action, especially off these lows here in Europe stocks. And guys, looking at some individual names to buy ahead of the tariff turmoil, I think one of them is Nvidia. We still are below the 200-day moving average, but we've seen some very, very solid momentum off the lows, and we can actually go ahead and retake that 200-day. And if we do, that probably does open up all-time highs near the 150 area. If we then go ahead, take a measured move to the top end, you're looking at 30% from there. Another mega cap that I do like is Meta. Meta has actually retaken its 200-day moving average, bouncing off it, finding support, and then we can see some upside. Meta reported great earnings, and I do think we probably will go ahead and see those all-time highs. I hold Meta in my portfolio. And if you're on the more conservative side, you could probably look at Visa. MasterCard's another one, well above the 200-day moving average, bounced off there. This is a more of a defensive long duration trade, something you just buy, set and forget and hold for a very, very long time. So any one of those names in the mega cap space, those should do really, really well. If you're looking for higher beta, a stock I've been looking at a lot lately is DKNG, DraftKings. Now they reported, I would say, not great earnings yesterday, and the stock was actually up today 2.49%. That is telling you everything you need to know. I think we probably go back to like the 40-45 area somewhere along here, especially once we retake this 200-day moving average. And diving into sentiment, this is CNN's Fear and Greed Index. And to kick the week off, guys, we were here in the neutral zone. We've pushed into the greed zone, and we've pushed sort of to the middle area here at the 62 level. And that really goes to show what emotion is driving the market right now. And I think this is probably where we are going to stay. We may push back into the neutral camp if we do get a little bit of a pullback in the next coming week or trading sessions, but we should trade around this area. And I don't think we are going to get into extreme greed, not without a furious rally to all-time highs. However, the move we did get off those Liberation Day lows was actually quite spectacular. In fact, we went from extreme greed, we were at the single digits, number 3 right here in the Fear and Greed Index, to 56 greed. It was an absolutely insane move. We gained 18% in 17 sessions. We went from deeply oversold to where we are right now in greed territory. And that is called a breath thrust. We actually did trigger a Zwig breath thrust. And generally speaking, guys, the performance we can expect from May to October when a ZBT does trigger is about 6.8%. The average in all other years for the S&P 500 is 1.3%. And guys, the May to October period tends to be a very tumultuous period for the S&P 500. There's a common trope that says sell in May and go away. And so to actually have these type of returns in this period of the year, very, very strong. So I do think we do go higher, especially if the earnings continue to print as they have. S&P 500 is reporting 14% in earnings growth for this quarter. The expectation coming into this earnings season was for 7.8% in earnings growth. I did not think earnings were going to be this good. 75% of companies reporting above analyst expectations for earnings. And if you remove the energy sector, you're looking at very close to 20% in earnings growth. Stellar stuff. And Q1 earnings season has seen a surge in buyback announcements. And as we exit this blackout period, we are going to see these buybacks come to market, further supporting the price action to the upside. And as long as the macro holds up, I think we will continue to make higher highs, not without some volatility, but we did see Atlanta Fed's GDP now for Q2 tick up from the 2.2% mark to the 2.3% mark. Very interesting. And household balance sheets are the best levels in history, with assets almost 10 times greater than liabilities. It's the economic equivalent of having a bulletproof vest around the economy. You can feel some pain from impact, but nothing fatal, guys. Even if you remove stuff like pension funds, right, which is like your retirement accounts, and then you remove homes from this, you're still looking at total assets of about $80 trillion compared to liabilities here at around 20 trillion. So look, even if the economy was to go into a downturn, consumers have a massive buffer. And also household debt service payments as a percentage of disposable income is actually near historic levels. I mean, look at where we were in 07 in the GFC. Look at where we were in the 80s, throughout the 90s, where we are right now. Yes, we have seen a massive uptick. However, we're still at historically low levels. And I would say that this was more normalization than it was the debt service actually creeping up. Households and consumers are in a very, very strong position, regardless of all of the headlines that come out of the US economy. Looking at earnings in the week ahead, we got a light week, guys, nothing major. On Monday, before the open, we have Monday and Hertz. That's about it. GCT here after the close, Rigetti Computing, nothing much on Monday. On Tuesday, we have Berkshire, JD, SE, Under Armour, Petrobras, and Oklo. So kind of a big day. Some China names reporting. On Wednesday, we just have Cisco. That's the big name. And then on Thursday, we have Walmart, Baba, John Deere, and then Applied Materials. So the biggest days are going to be here on Tuesday as well as Thursday. And then in terms of high impact data, we get the CPI on Tuesday, the core inflation, the month over month, year over year, the headline figures and the core figures. Then we get PPI on Thursday, retail sales on Thursday as well. And then on Friday, we get building permits, housing starts in Michigan, consumer sentiment. So a pretty big week of data next week. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.